So no more votes, please. And the results show that 66% of you disagree in the room. It seems pricing levels have hit rock bottom and we aren't heading towards recovery. So perhaps that's a good, interesting starting point to throw to my panel. We're all doomed. Yasir, perhaps your thoughts on this?
Yes, as one who voted for disagree, I think, unfortunately, there is still abundant supply of capacity in the region. That inevitably can lead to only one thing, which is more fierce price competition. And this is the name of the game in the MENA region. Despite the efforts to try to compete on non-price enhancing products, services, etc., price seems to be the main distinguisher in the MENA region. So, however unrealistic it is, this is the fact, and this is again vindicated by the majority, 2/3 who have voted, that we are yet to see further price reductions in the region, probably over the short term, as it has not bottomed out totally. Maybe there are certain segments of the industry that will show at least stabilized prices, but I think by and large, we are yet to see even further reductions and further adjustments in rates involvement.
Thank you, Yasir. Bob, as a broker on the panel, the only broker represented, any thoughts on this?
Yeah, thank you, Jack. First of all, I'd like to thank the Qatar Financial Center for organizing this year's Multaqa. It's a fantastic event, and the Qatar Central Bank and Global Reinsurance. But I agree, and I voted for the disagree as well, because I do believe that rates are going to continue to fall. But I think when looking at the MENA region, it's important to recognize the breadth of this geography. It spans from Morocco in the west to the Gulf, and in some cases across the Gulf to Pakistan and other parts. And there is not really one market that you can define as MENA. It is a conglomeration of a number of individual country or clusters of markets. So North Africa has a different set of dynamics. Egypt has a different set of dynamics. The Levant, the GCC, and the like. And even within the GCC, you have, I think, some variety in pricing between the UAE, between Saudi Arabia, Qatar, etc. But by and large, I think prices still continue to fall in the what we would describe as the traditional property and casualty marketplace. If you look at the non-life or the non-P&C sector, including the employee benefits, I think you can't say the same thing about employee benefits. It is a competitive environment, but prices are going up for a number of reasons. Medical inflation, losses, etc. So I think you have to divide the marketplace between the P&C and what we define as the EH&B sector. In the traditional property and casualty marketplace, the pricing still reflects it both in the large risk in the energy space, very competitive marketplace, in the non-energy, the large risk space, the power, the construction, etc. Now, are decisions made only on price, solely on price? Price is important, but I think buyers are looking for more than price. I think they're looking for innovation. I think they're looking for financial security, stability. But there still is a large volume of capital that continues to flow into the region for a number of reasons, and we'll continue to see, I think, soft markets or softening market for the next 12 to 24 months.
Thanks, Bob. Waleed, you're the insurer on the panel. What are your thoughts on this vote?
Well, I think Bob's correct. It is a complex equation. However, we have a different view. We think, no doubt, there is overcapacity in the market. The fact is that we have not had any significant natural catastrophes, thank God. The results are positive on the P&C side, so the profitability on the P&C side is good. That is one indication why you do have that reduction. But we believe in 2014 onwards, we expect to see a stabilization of rates, premium rates. One of the reasons is that we are seeing a growth or a rejuvenation on the investment side, particularly in the region or the country that I represent, the UAE. We're seeing a growth and an enhancement in equities market, capital markets. So therefore, we predict that the insurance management of the companies in the UAE would focus now on pricing rationalization rather than, because there won't be the pressure as it was in 2009, 2010, 11, 12 to get the net profit based on investment. So there's no compensating factor. With that, we expect then in 2014 onwards to be a stabilization of the premium rates.
Thanks, Waleed. Immediately, any thoughts from the floor? Anyone want to comment on the vote or any of the questions raised so far? If not, I will move away from insurance and perhaps, Salvatore, to you about reinsurance in the market. So I'd really like to get your thoughts on the regional reinsurance markets, retention levels, sort of on average around 66% in this market. Any changing trends you're noticing?
Just want to make one point regarding the price as well, because I do believe what worries me much more is the fact that the price probably, is one issue, but the inclusion of additional coverages is much more important. And that's what we see recently, of course. We have more or less a stable price, but much more risk inside the coverages. And from that point of view, of course, as a reinsurer, we have to be very, very careful, because the risk, as we have seen in previous presentations, are increasing. And, from that point of view, I do believe that we should be very, very careful when we talk about further decrease of pricing. But you were asking about reinsurance, and I cannot add much more than the interesting presentation that we have seen before from Amir. And personally, I think we are going through a paradigm change in the reinsurance, and we are going to see many, many changes over the next couple of years. Those changes are driven by the fact that we have on one side the capital market who is coming in, and we are talking a bit less about the broker market, who is also extremely innovative and trying, of course, to offer solution to their clients, which is absolutely legitimate. So from that point of view, that's the market forces who is working. But then, of course, we have also two other forces, which are the fact that companies are retaining more and more, and additionally, of course, economies which are not growing. So from that point of view, reinsurers are at the moment are desperate to find new, let's say, income streams, and that automatically means that they are either diversify in lines of business, so entering into lines and coming to the Middle East and offering even agriculture business from that point of view, or in regions. That means automatically, reinsurers who were never in the Middle East, they're coming to offer the products also on their capacity over here. That leads to more capacity. However, we have learned, and I'm sure that you are business people, we are business people, if you enter in a new market, if you enter in a new line of business, hardly you never make mistake. You make mistake, and probably you have to pay a price. And over time, this will lead, of course, to concentration. M&As are going to be the name of the game in the future.
Sticking with you, Salvatore, you told GR recently that during the recent 1/1 renewals, reinsurers began to impose some important changes in treaty rules, such as new co-insurance terms and limitations on onward FAC. So should we expect more pressure from reinsurers on cedants?
Yeah, I think so, yes, no doubt. And this process has started. However, I would, think that brokers and companies are clever enough to know how to make the transition over a certain period. What I think is extremely interesting right now is the fact that you have, let's say, two different sets. One is the leading market, and then you have the following market. And for sure, reinsurers are able to defend their balance sheet as well and their interests. So if somebody comes to a client and he adds value, of course, probably has different terms and conditions than somebody else. The question for me is how long the following market is going to be able to support the terms and conditions that they sometimes are pressed to pay.
Hasir, as the fellow reinsurer, any observations?
Yeah, interesting. I would not classify the following reinsurers as, the culprits of all of this. At the same token, I think the responsibility is on both on leaders and followers. Of course, at the end, the client has to get the placement 100%. So he needs both. I don't think follow reinsurers have any problem having differential terms. If the leader will have any special concessions, so let it be. I don't think this is something that is unrealistic to ask. The followers have an obligation, but I think the times have also changed. Today, in the classical sense, as a follow reinsurer, what is it really that I'm following? There are strict claims cooperation clauses in place. The leader is a leader on a treaty. Is he really looking after the interests of his company or the interest of all the reinsurers? I think in the past the answer was the former. Most lately it is really the latter. He looks after his own interests. So I think there is a disparity over here. But from the client's perspective, obviously they need one reinsurer to negotiate with, one person to set the terms and conditions, and so forth. Earlier on, I think you mentioned on the issue of retentions, topical issue in every conferences. I think reinsurers have taken action, and if you segment the markets involved over here, you could see the different response. Masked below the 60% figure that you've mentioned is really business which is motor as well as medical health insurance, which constitutes a large section out of the gross amount. In places like Saudi Arabia, those two classes today comprise easily 65%, if not 70%. So let's not be misguided by an overall figure and try to look at the segments. Really what hurts reinsurers is the property classes, particularly the fire class. And there you can find retentions on the treaties even below 3%, which is quite normal. It's quite normal to find. I don't think it's normal that they should be over there. Move a little bit away and you see the retentions are increasing in other profitable areas, notably on the engineering side, which is performing well. Look at the facultative side. Very, very typical to find a mid-sized industrial policy, let's say $100,000 to $500,000 original deductible, or 50 million primary, and then 500, 600 million on top of it as an excess of loss or proportional cover. Now, that is also not proper as a way to restructure, because not only we should be asking insurance companies to take a decent retention, also original assureds should also take a decent retention in the risk. Again, what insurance companies have failed, not all of them, some of them, they have failed to understand is that the risk management aspects also need to be applied, and our direct clients should also reap benefits to restructure better risk solutions than just to reside with a small retention and that's it.
One question, final question on sort of the overview of the regional markets, and to all my panelists, is seemingly capacity is growing within the region. So to what extent is the industry exploring opportunities to develop new products to stimulate this demand? How innovative is this market? Waleed, perhaps, as an insurer.
Well, I don't see the correlation between the capacity and overcapacity and product innovation. I think product innovation generally is not something just on an insurance level. It has to be on a reinsurance level as well as the broker level. So I think all three stakeholders are focusing more on the fundamentals of their business. We're seeing a lot of development of risk engineering services, advisory services at every level. So I don't really see a correlation with that. I think innovation and product innovation is driven not by the size of the purse. It's more of the culture and management style and your desire to provide consumers different solutions to make them protect their assets.
Bob, is the broker's role in the region changing with this extra capacity? Amir touched on it in his presentation, the changing dynamics between the insurer and the broker. Are you sensing any change?
I think the broker's role continues to be the advocate of the client. That is our primary responsibility. Amir in his comments talked about a tripartite relationship between the cedent, the broker, and the reinsurer. I thought that dynamic ignored perhaps the most important element, and that is the client. Without the client in that relationship, it's not going to be a successful relationship. So we always look at it from a client-first perspective and delivering an innovative solution to our client. First of all, understanding their risk dynamics, understanding what their concerns are, and then trying to craft a solution that takes advantage of or utilizes the resources in the regional marketplace as well as in the global marketplace. Some of that will be an insurance solution. Some of that will be a non-insurance solution, a risk management or other mechanism to deal with risk.
Thank you, Bob. Yeah. Any questions so far before I move on to our next topic? I'm aware I'm sort of rapidly eating into our time, so I want to move as quickly as possible. So if no one has any questions, I want your input again. So if you reach for your voting pads, we're going to move on to regulation as a topic. I know we have a regulatory discussion debate tomorrow, but I feel with the high-quality speakers on stage, I think we can talk about a few regulatory trends rather than specific developments, which will be discussed tomorrow. So if we can have the second voting question, please. So the question is, which of these should be top of the agenda for the region's regulators? So press A if you think it's minimum capital requirements, B for minimum retention rules, or C for greater regulatory coordination and consistency. So voting is now open. So if you would all like to vote, so you only get to vote once, unfortunately. I'm sure perhaps there isn't an option for all three. So please cast your vote now. That will be closing that very shortly. So just a few seconds left before this has to close. So three options: minimum capital requirements, minimum retention rules, and greater regulatory coordination and consistency. So we're now closing that vote, and the results show greater regulatory coordination and consistency by far and above the biggest winner on that one, with the previous two kind of neck and neck. These were the topics that came up, and this is the reason I asked this question at last year's Multaqa. These were the topics that were mentioned recently. So an open question to my panelists. 1 year on, is this anything changed? Is that option, the greater regulatory coordination, still your biggest concern? Who wants to?
Was this the same answers last time?
It was not asked last time, but it was just commonly came up.
I'm surprised by the ranking. Again, maybe the choice of words. The greater consistency, yeah, it's a requirement, but consistency probably vis-a-vis others. So maybe from a pan-Gulf region, yes, greater consistency and adequacy is it. But for me, the driver is capital. Minimum capital implies optimum capital. Optimum capital will lead into risk-based capital. Risk-based capital will lead to optimized retentions and so forth. On a macro level, it's really the capital that is the engine for insurance regulators to orchestrate, if that is the proper word. Obviously, harmonization leaves a lot to be desired here in the region for those companies that are seeking cross-border trade and, let us say, fairness of rules. But for one, I'm probably surprised to see that taking that much vote. If I understood the questions as they have raised.
I'd like to add to that. One of the things that you hear, I mean, anytime you go to a lunch or dinner, you start seeing people comparing different regulators. This is a strong regulator, this is a weak regulator. I think it's important for us as industry to define how do you define regulatory strength? And having a clear picture of how do you define that, in our view, is that it looks at, does the regulator do their core duty, which is to have financial stability and promote financial stability, at the same time financial integrity. I think the second part is about consumer protection. And if you do the first two, which is financial integrity and stability, you'll certainly protect the consumer. And how do you do that? I think it's very important that you have to emulate the market that you serve. All the markets in the emerging region that we operate in require transparency. I think interaction with the customer, let the customer understand what the customer wants from their regulator. Another element that I think that defines a regulator, whether it be strong or weak, is what role they're playing in terms of dispute resolution. A lot of the times we see that missing, that they don't go into dispute resolution or having a role of an ombudsman to try to lessen the pressure on the judicial system. So automatically, if there's a debate between one of the stakeholders, a broker, insurer, and a reinsurer, or more importantly, the client, automatically it goes to the court system. So we think that a good barometer of the strength of a regulator should be in how they facilitate the seamless resolution of disputes between the stakeholders. Also, part of that, and I'm sure you're going to be talking about talent development. I know that you have a topic on that. I personally believe that there is a role for the regulator for talent development. They have to promote nationalization and localization. This is a must, and I'm sure the panelists will talk about that later on. So before talking about what does the role or how do you define the strength or weakness of a regulator, let's have a definition. And if we can focus and gauge, like we do with insurance companies and reinsurance companies, give them a financial strength rating, perhaps we should rate the regulator as well. But doing that, we need to identify what makes a strong regulator and a weak regulator.
Insurers do more to help? Can insurers help the regulator? Where's the
Absolutely. Look, there is as a leading insurance company or reinsurance company or broker in the market, you have a role to support and have the regulator understand the issues that the market faces. Many of the progressive regulators actually have gone in and have sessions to understand that more. One cautionary point is that don't get swayed by any one interest group. You have to balance it. So I think balance is very critical because today you're meeting with a panel of insurers, you get a perspective from the insurance side. Next week you meet with the broker community, they may have a different view. I think having a balanced mindset and playing the role of hegemon is very important for the regulator.
I think if I may, I think it's a difficult role to play. I don't see regulators' job is not to please their licensees, their regulated companies. It's like, classical issue of, David and Goliath. How can insurance companies or whatever third party come and rate regulators? Each and every regulator wants to have the best regulatory system in his country. He wants to have robust, insurance companies or banks or whoever he is regulating. They have really their best heart and interest to make their own regulation a success. We have a role to play, and I think unequivocally, almost all regulators I've interacted with, they open the door, they listen, they issue, etc. Of course, it's their prerogative to make the decisions at the end of the day. I think we do have a role, but to step that role, you will not find, even insurance companies, if you come and rate them, each will give you a different one. I think there are common standards, and I believe the AIS role, which is the mother of the supervisory authority, is the de facto regulator of regulators, okay? Because they set the standards. And this is why you see all our regulators increasingly in the region that every year they beef up more and more their regulatory supremacy to comply with those international standards. Sorry.
No, it's good. And actually, Bob, I want to throw this to you. So while he's talked about rating of regulators, and Yassir has discussed about the element of communication and discussion with the regulator. But do you think as a business, as a broker, as a reinsurer, insurer, is an element of self-regulation needed? You know, you're operating across MENA, which could be 22 markets, very inconsistent in some elements, little harmonization. So maybe as a business, you need to take the lead.
Yeah, I think there is an element of self-regulation. I think it's important that the industry, the community, in each of the individual markets have the ability to meet, talk, discuss. You know, we have across the GCC in each of the different markets a different dynamic. In Saudi Arabia, you have a broker association which is established and sanctioned by the SAMA. In Oman, you have a similar situation. We don't have that situation today in the UAE. It's something that's being reviewed and discussed. There is, I think, a desire amongst many of the brokers in the UAE to create a body that will allow the broker community to speak with a unified voice. Though getting two brokers to agree on any subject can always be a challenge, but there is a move afoot to try to create a unified voice in that market as well. But around the original question, I'd just like to comment on that. I think the minimum capital issues are really critical. I don't believe that a consistency in regulation around MENA is even thinkable or possible. Back to my earlier comments about the diversity in the different marketplaces, and each market creates its own, has its own exigencies that the regulator must deal with. I mean, take, for example, just the United States. One would expect in one country like the United States, you would have one regulator, but indeed you have 50 regulators in an industry that has been operating for 200 plus years. So to expect a single regulator or a consistent regulation across the MENA region, I don't think is reasonable. I think minimum capital is essential. Because minimum capital requirements help strengthen the risk-taking ability of the insurance markets. The insurance markets no longer become conduits of premium from the insured to the global reinsurance market, but become real risk-taking entities. And we've seen, I think, in the last 20 years in the GCC in particular, that as capital requirements increased and companies like ADNIC and others who have sufficient capital are able to perform as world-class insurers. So minimum capital, in my opinion, is a critical consideration for regulators across the MENA region.
I'd like to add a
I
comment.
fully agree, but one point which we should not forget is that probably the answer is driven also by the perception of the people. I mean, perception is that regulators are changing the rules or not implementing, things which are in the pipeline now since many years. and of course it costs also a lot of money. And I think a cooperation between regulators and insurance associations is necessary to coordinate, and to understand really the needs of the market as such. Otherwise, we are talking and paying a lot of money, but nothing really happens. And, this is a huge issue. And I'm not surprised that consistency came up on the first ranking here. That's the perception of the people.
These associations, who's going to lead the way? It's all well and good, it's a nice idea, but is it the insurers? Do they come together? Or Bob said brokers will never agree on anything, so creating a standard.
To be frank, I think that insurance associations, they have a role. Otherwise, they should not exist, right? So, therefore, it's just the process, I think that insurance company, they have to coordinate with the association what kind of vision they have in respect of regulation. And then, of course, it should be also the association who defends, the community and the market as such. That's just one process, one point. It's not, of course, the full.
Sorry to interrupt, but I think the important point in any association is the makeup of that association. Absolutely. And there has to be an equal voice between insurers, brokers, claims adjusters, consultants, and the like. And traditionally across the geography, insurance associations have been dominated by insurance companies because historically they have been the primary participants in the insurance marketplace. I think in the last 20 years that's changed with the rise of brokers and the like. And I'm not just talking about international brokers, I'm talking about local and regional brokers as well. So I think in any industry association there has to be an equal voice, and it can't be dominated by one segment of that community.
I think we're simplifying the process here because we talk about minimum capital requirements. I think the regulator's role is more important than that because we are not talking about risk-based capital and what is the utilization of the capital that you have. So it's not simply just getting the minimum capital requirements and validating that, but how is that capital being utilized? Is it risk-based, adjusted? The other point that we have not talked about is enforcement. Ultimately, the role of the regulator, in our view, is enforcement. So maybe one of the questions you should be asking next Multaqa, inshallah, is how many are actually being audited? How many are having on-site reviews? How many are being inspected? And are the results being, presented to the stakeholder, which is the more fundamental one, is the policyholder? Are we publishing results of the audits done by the regulators in different media? So I think it has to go beyond just being a bureaucratic process, but more of a proactive engagement, highlighting and promoting those good practices. Perhaps one of the things the regulators can do is recognize companies that take the extra step and lead by example. We're not seeing those yet. I think we're still at the rudimentary level talking about minimum capital requirements. I think it's beyond that. I think the role of the regulator is much more complex than that, and it should be. And one of them is enforcement.
Do you see final thoughts on this topic?
I have three sort of summary conclusions out of this. First of all, in my views, the role of regulators is evolutionary. They should change from regulators to supervisors. Henceforth, as markets, self-regulation is the way to go in the future. And this is what you see in so-called developed countries. Self-regulations. But to have self-regulations, you need insurance companies that are aware of the rules of the game. They are up to it. They have good compliance. They understand the repercussions. This is the most effective regulation, is self-regulations. We need to build time and effort to reach that stage. Secondly, I'm sort of a realist. Let's fix our houses before then we talk about integrated markets and harmonization and a wish list of things that we request the regulators to accelerate or do. That, unfortunately, has to be on a pan level, not on a micro level in the countries. Thirdly, as Walid said, the fault is not, again, with the regulators, because the regulators themselves do have their own set of rules to evaluate themselves. I assure you that the World Bank, part of its criteria is to ensure that the regulators in each and every country can pass certain sets of rules, and they do so. And that is how they measure the effectiveness. Whether they are transparent or not, or we're aware of it, I don't know. I'm yet to find out on this. But I think we should be frank. We are here to help the regulators. And I always have said this before. If there was an open forum like this, where we can see all the, for example, GCC regulators, and we can have a dialogue with them, that is, the way to go. I know Fareed is smiling there because that is the topic of the next Gulf Insurance Federation October meeting, correct? Yeah.
Good advert as well. But no, thank you all for this. It's a really good topic. And before I move on to our next issue, does anyone have any questions from the audience to ask any of my panelists about the discussions we've already had today? If not, I'll get you all to grab your voting pads. Going to move on to the topic of corporate governance and talent management. So the need for global insurance industry to adhere to sound corporate governance is greater than ever before, particularly so in MENA, where the industry is so underdeveloped but is growing fast. So the need for strong standards need to be developed very quickly. So if we could have the third question up, this is, I hope they're going to come on screen very soon. Very simple question, not too many words in it this time. If it's not looking like it might work, perhaps we'll come back to it. Okay, here we go. So the voting is open. The question is, to all the chief executives in the room, do you have a succession plan in place? Press A for yes, B for no. I think we can close this quite quickly because it's not too complicated a response. So we have a few seconds left to go. So A for yes, B for no. Be intrigued with these results.
Also tell us how many chief executives there are.
Yeah. Well, if we have no results, they're coming up now. So 59% say no. So a clear leading towards the fact that succession planning, which is obviously a key element of good corporate governance, isn't in place. So to all my panelists and also to the audience, perhaps you can either you can share your vote or give examples of what you as chief executives are doing to develop a succession plan for future leaders so that the legacy you have all created can be maintained. Walid? You don't have to share your answer.
He's still young.
Well,
You're still a young guy, so.
But some of my successors are actually outside. Some of the audience of ADNIC executives are here, so I can't comment by name.
Yes.
But no doubt, certainly you have to cultivate the talent within. You have to insulate yourself with the people that probably know more than you do in their areas of expertise. I think it has to be a combination, mixed platter of fatouche, basically having people with different skill sets, different cultures. Localization is an important part of that mix, and I think ultimately you have to say that nothing lasts forever, but one of the things that you can do to help your legacy be there is to have a team of leaders that can come in the event that you're crossing the street and something happens to you. It's basic risk management 101.
But I think as well that, the role of the CEO should, of course, to have a great team and, to be sure that if something happens tomorrow, somebody will step in. However, the role for the succession plan is in the hand of the board. The board should have a vision as well. What would happen if something really, happens to the CEO? And that's something I think that, particularly in the Middle East, it's starting to evolve and a more entrepreneurial, let's say, approach rather than a more family-oriented approach. And that's something which is going to be extremely important because with the succession plan, it has to do as well with talent management, and with the fact that also here in the Middle East, things are changing. Markets are changing. And you need eventually new skills. You know, we were talking about innovation, but to be frank, if I don't know how many people now here have created something new. You know, to really be innovative, you have to accept as well skills who are coming eventually from other areas. So new thinking processes.
It's a good point. Insurance innovation often comes from adjacencies. You know, I'm good at motor, so I'll do this, which is very similar. But to what extent, Salvatore, sticking with you, you mentioned new inputs. Are we talking artists, scientists? Are we talking non-traditional insurance? How do we attract these people?
I'm mainly now focused on reinsurance, so therefore...
reinsurance, sorry, yeah.
So I'm sure that others, particularly brokers, they can tell you much more what kind of needs, you know, the market has, and therefore what kind of skills then at the end of the day you need to make sure that the innovation comes in. I think in reinsurance, what is going to be extremely important is people with financial background. You know, what we have to learn in the future is to read the balance sheet and then afterwards to consult based on capital and balance sheet, what would be the best possible structure that the company should implement for the future. That's something which we do not have enough skills. I have not a lot of underwriters who understand, you know, to read balance sheets. And so from that point of view, we have quite a long journey in front of us.
I want to go back, if I may.
Please,
I want to go back to your basic question was about succession planning, and we look at the organization as a relay race, and you have to know when one person is willing to let go of the baton to give it to the next person. And the reality is we don't have that. We don't have that in the region that we operate. People do not know when to give the baton to the next person. And that's an issue. I mean, if you've been doing this for 40 years, 45 years, wonderful. But I think you should transfer that knowledge, that leadership to someone else. And so we have to have people that will be looked at not just as CEOs or chairman of the board, but mentors. I think the mentorship concept has to be more ingrained in our culture in the region here. There's too many people that don't know when to let go of the baton to give it to the next person.
Personally, I don't find the answers to be out of the ordinary. I would have expected exactly what has been said. Even I would expect even a larger percentage of people voting on the B. I think as a concept, and we are all part of the corporate governance, we have a code and we have to sign it and send it to the regulator and the board has to endorse it. I think theory is fine. And what Salvatore said is absolutely true. Ultimately, it's the responsibility of the board or the nomination and remuneration committees to chart out succession plans. But let's distinguish two. Succession plannings for CEO, which are events of ordinary and extraordinary. I would say ordinary is the typical retirement. The extraordinary, something unpleasant happens, the CEO leaves, etc. Contingencies are hard to plan. I'm not saying we should close our eyes to them, but it's sort of the risk business that we are in. We have to put, at least let's fix the sort of the part one of the equation, which is the retirement or natural retirement of an individual or a CEO, and try to see what are the prerequisites involved. This is taken very, very seriously in the West, and I think it's a matter of education. But nothing is perfect, nothing is complete. I think it's good to aspire to fill the vacancy and come up with ways and rules. Now, whether the individual has to be numerate, as Salvatore said, or should be person with human skills, or you can find somebody outside the industry. And there is really no harm to bring somebody outside insurance to head an insurance company. I don't think this is a difficult route to find, but it's also a resort. I'm sure we have a session on HR later on, but one of the continued deficiencies that we have is the scarcity of talent pools over here. And even more and more so as you go to the C levels. We do not have Arab-speaking CFOs. Okay, I defy somebody to find 1 in 100. An Arab-speaking CFO doesn't exist here in the insurance industry. I'm not trying to make general. You will find probably Arab CEOs, but again, the ratio there may be 1 to 20 or 1 to 30 and so forth. We have to delve deeper and deeper and try to correct this imbalance. And it's a collective measures. Of course, we need also schools, we need leadership, centers of excellence. We need to do all of this because so long as you have the raw material to make CEOs or C-levels or C-suites as they call them, this is what you should capitalize on. And you should have an early warning signal to see how you can start the process. We are lacking this. We are lacking the identification path over here. And I think part of it is also, I'm not going to talk longer, part of it is the industry we are in. The industry have a very steep learning curve. And talents, to retain talents is harder than to find talents.
Yassir, it's not the question of the resource, it's the training, I guess. I read a fact that youth unemployment in MENA is 25%, which exceeds any other region in the world. Expected 55 million jobs needed by 2020 to support the regional growth, keep pace with this growth. Now, Bob, to you, I know Marsh, you have your Marsh Academy in Saudi, so perhaps give a very short overview of the objectives, but also why, as a company, you decided to invest heavily in the training of your own staff and your clients.
Clearly, talent acquisition is our biggest challenge in the region across the MENA area in every market in which we operate. In Saudi Arabia, we established what we call the Marsh Academy, which is a training center for us to attract young graduates, fresh graduates from universities, both in Saudi Arabia, top universities in Saudi Arabia, as well as around the world, to introduce them to the insurance industry, because we continue to compete against other financial services sectors. We compete against banks, we compete against oil companies for the top talent. I think, as Amr said this morning, he certainly didn't plan to have a career in insurance, and neither did I, and I expect about 99% of the audience in the same situation. What our obligation is, our challenge is to teach the young graduates the benefits, the opportunities that exist in the insurance sector, in the risk sector. And you know, my career goes back to 1981 here in the region, and in those days, in Saudi Arabia in particular, we operated below the radar. There was no regulation, there was no industry to speak of. It was there, but it was sort of in a gray area. It's only in the last 10 years that the industry has really emerged as a viable source of employment. So it's taking us as an industry a great deal of time to raise the level of knowledge of what the career opportunities are. I think once we do that, then we will be able to attract young, successful talent and create opportunities for future leaders, because in reality, we need to have more leaders running our businesses who are from the local marketplace. And so that is the biggest long-term challenge, I think, that our industry faces today.
So Salvatore, Multaqa 2050 next year. Do you think we've had any developments on this, or the same discussion?
I think we are going to have the same discussions. That's not, something that you can change in 12 months.
To be solved
No,
it's a long-term
that's
commitment.
long-term. However, I think what is important is for each and every company, what should be clear is the profiles for each and every position that they are offering. And of course, what is then important as well is that the person who is getting this job should be also motivated to do a good job. I mean, at the end of the day, it's great to say we need local people. But then, of course, if the local people gets this job and then afterwards he does nothing about it, that's going to be a real issue for the company as such, because the company is not going to develop. And our ultimate goal as entrepreneurs is to develop companies. So the role of the CEO is to make sure that he is hiring, of course, the right people, and to motivate those people and to make sure that at the end of the day, something comes out. And, the rules must be clear. And also, regulators and governments, etc., They have to make sure that the companies are able to develop and therefore to have the flexibility. If somebody is not performing, he risks to lose his job. Because that should be clear. Because it's great to have, of course, you know, to talk about, because sometimes it's academic, you know, I mean, oh, it's nice to have young people who are, but the people have to perform. They have to do their job. They have to do a good job, an excellent job.
I've just had a taste of what it must be like working for you, Salvatore.
Oh, no.
Keep up my hard work.
I'm a nice guy from that point. But I think we are in a privileged situation, a privileged industry. And I think we were just talking before, we are not able to sell ourselves to somebody, to others. So let's make sure that we are able to do this. And for that, we need good people. Only with that, we are going to be able to outperform the bankers who are fantastic, you know, when they have to sell themselves.
Can I ask a question to all our panelists, and please keep your responses as brief as possible. But how did you fall into the insurance industry or reinsurance industry? Waleed, you?
Sure.
Because the response I always get is that I fell into
first of
it.
all, I didn't fall in. I walked in, which is a good thing. The thing before I respond about my personal situation, I want to go back that we always hear about this, that people just fell into insurance. But I think if you ask the same question to the bankers, the institutional investors, they probably have the same thing. They didn't grow up saying, I want to be a banker and an institutional investor and an equities stockbroker. That's the reality. So people choose, we believe in something in this region called nasib, which is your destiny. We also believe that there's sometimes different things that happen in your life that lead you to this path. And you should make the best of that path as it comes to you, right? In my particular situation, it's a combination of my academic background. I was a physics major. I was a political science major as well, so I had a double major. And really both jobs, to go in and excel in those jobs, you need a minimum of a PhD program to be a research analyst and beyond. And I didn't want to pursue the academic area. And with the fact that I had a physics background, I was very much into extroverted in terms of personality. I found myself working for a very reputable company called Crum & Forster Insurance in the United States that was focusing on risk engineering, and they really respected the discipline of risk engineering as part of the risk management process. So that's where it started.
Yes, sir.
I have to agree with Bob what he said. I'm part of the 99% who fell into this. I'm an engineer by education, finished my studies, I did an MBA, and then came across an ad in a newspaper, company looking for graduates. I went there, and after 20 minutes, the person who has hired me, who was the DGM of the company that time, just took a piece of paper from his desk and wrote on it 17th May 1987, told me, on this day, which was after 1 week, come and give your papers to the HR manager. And so it was. I have to say, though, and this is what we would like to impart to the young generation, insurance, particularly reinsurance, is a very exciting career. And I think you make up what you want out of it. Probably if you're a doctor, if you are probably to a certain degree an engineer or other traits, you become very much tunnel focused, completely the opposite in reinsurance. I personally learned to know a little bit about economics, a little bit about the industry, a little bit about the sciences, and so forth. And this is how one learns and to build himself. And I think it's a good career, but I think in something which was echoed probably by Salvatore before here, we do not project the image to the outsider that we are proud of our industry, that our industry is as professional as it is compared to doctors and lawyers and engineers. Although if you look at it, all these risks, concentrate eventually to our balance sheets. You find somebody who's putting a building next door, big ads. We've invested bank XYZ, 100 million in redevelopment of projects and something next door. We don't put ads as insurance companies when we insure, let alone when you reinsure. We don't put ads when we pay claims. So I think part of it is also self-induced. This is the industry we're in. We choose this sort of mundane profile.
Modest.
Yeah.
Very quickly, very
I want
quickly.
just to say to you that is one key factor for my decision was they actually offered a company car, and that's a great thing coming out of college to have.
Salvatore,
For me, it was more, I would say, the responsibility of my wife, because I met her in Florence, and afterwards she is Swiss. I had to move to Switzerland and change the university. And at that time, and still today, this university is offering a one day where different companies from Switzerland is coming to present their units. And the HR guy that I met there, and I was looking for something international, he said to me that they're just starting with a reinsurance company. I said, what, reinsurance? What's that? I never heard the word reinsurance. So he said, oh, you can, spend about, meet the guy who is heading this department, and he will tell you something. So I went to meet this guy, and I have to say that I spent 2 hours with him, but I didn't understood anything. And that was the decision, because I said, okay, now I have to understand what's really reinsurance. And that was, the reason why I started. But I would say today, first of all, as Yasser said, we can be, let's say, honored and proud to work for this type of industry. But I'm still convinced, with all the problems that we have seen and that reinsurance has right now and is going through changes, this is the insurance or the industry of the future. Because outside, risks are all over. We just have to price those risks. And then afterwards, of course, to convince people that it makes sense to buy for this type of coverage. So we are sitting here. We are the industry of the future.
Finally, you, Bob.
Yeah, I'll be quick because it's the end of the panel. But mine was a very mundane. I was interviewing for jobs after finishing my master's degree, and had interviewed with a number of banks, New York banks and Philadelphia banks. And there happened to be a company that came on campus that was interviewing, and I liked the name of the company. So I wrote my name underneath it. The company was called Chubb. And they hired me, and it's been all up ever since. So that was my experience.
So the conclusion is, for all the chief executives, offer a car and give yourself a good name, and you'll have the generation of the future. Gentlemen, thank you all for your time.